All right, it has been a wild month so far for investors. Dom Chu joins us right now. He's got a closer look at some market sentiment indicators. And Dom, I'm guessing they're changing pretty rapidly because it sure feels like the sentiment's changing rapidly, too.
They are, Becky, because, I mean, you talked about that dreaded R word. That is recession, right? We talk about that often, but so are many other people in the entire world. And what we did was we went to Google Trends to figure out how much they are talking about recession. Google Trends shows that over the past 5 years, that term recession has been searched a number of times. But as you can follow along here, on an index from a 0 to 100 basis, it's been relatively calm for a good reason. We haven't been fearing a recession for quite some time now. But then just in the last few weeks or so has spiked up to the highest level of interest for the recession that Google Trends has tracked over the course of 5 years. Same thing goes for the yield curve inversion, because when you put that up there, yield curve inversion, that search has yielded next to nothing all the way up until maybe the last few months or so, and then a huge spike in interest in yield curve inversions for maybe obvious reasons over the course of the past few weeks, because we've gotten there and then kind of come out of it a little bit more today. So Google Trends shows that sentiment carrying out there. Can we talk ourselves into a recession? That's a big question for some investors out there. One other place to look is how investors are feeling. The American Association for Individual Investors and the AAII Outlook. Last week, on a weekly basis, they track sentiment for investors. Over the course of the last week, bullish investment sentiment is now at 23%. On average, historically, it's closer to 38. Neutral is more around 32. It's around 32, just about the same here. But bearish sentiment is now about 45%. Normally, it's closer to about 30%. So if you're looking for a possible contrarian indicator, a lot more people feel bearish right now than they have historically speaking. And one other place where it's all playing out in the marketplace, of course, in the last year, is in how stocks and bonds and gold have performed. Look at that. Gold ETFs have gone up about 26% in the last year. Long-term Treasury ETFs about 19%. Meanwhile, it's a 2% gain for the S&P 500. So that's where the rubber meets the road. Recession, yield curve inversion, bearish sentiment all playing out right now on those charts. I'll send things back to you, Joe.